I want to just caution all Bitcoiners to understand that just because we had one day of non-correlation, that does not mean that, in a full-out market collapse. Let's just hypothetically say that the market goes down another 10, 15, 20% next week. Not saying it will, but it could. And I think in that case, that would make it look very much like March of 2020 or September of 2008, where you get to a correlation of 1. And what that means is that everything will go down. People will sell. There'll be somebody who's leveraged that owns Bitcoin, and Bitcoin will be the easiest thing to sell, so they'll sell it. There's nothing that fuels the growth in the underlying base money that's sound, which is Bitcoin, and the older base money, which is close to being as sound, which is gold, as monetary debasement. And we're talking massive monetary debasement. If, and it's only an if, and I'd say it's maybe 50-50, the market goes down the way I'm describing.
The indicators of a collapsing global financial system are no longer hidden. Interest payments are eating up national budgets, central banks are stuck, and sovereign debt is skyrocketing. In addition to cutting rates without giving in to inflation, they are unable to raise them without blowing up the economy. Lepard doesn't use theories when he talks. He uses historical language. The devastation of middle-class savings and an inflow of newly produced currency are the inevitable outcomes of any fiat regime. We are approaching the last stage. Governments will print money to pay entitlements, cover deficits, and save failing institutions. Additionally, they will print more as their confidence wanes, hastening the collapse. However, there is a way out, such as with decentralized rare assets like gold and Bitcoin. When confidence in the currency declines, these lifeboats will rise. The biggest wealth shift in contemporary history is about to happen, as Larry Lepard predicts. Winners of real money against losers of fiat. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Way out on the curve of normal distribution of returns.
And then another thing I think we should point out, in case people haven't had the time to listen to it, was that Treasury Secretary Bessent had an interview with Tucker Carlson a couple days ago, and he said, Bitcoin is emerging as digital gold, a store of value, right? This is the U.S. Treasury Secretary. Can anyone imagine Janet Yellen saying something like that?
No.
it was stunning, right? And he's a gold bug, so but he's recognizing that Bitcoin's emerging, right? And he's right. Some people may not want to hear this, but and I'm very, very supportive of everything they're doing. I mean, Doge is a great thing. Sadly, I think doing the tariffs and putting America first, I think is a great thing. But I think even Bessent and Trump aren't fully aware of, as a market watcher, what I perceive to be a process that's going to be painful and we're not done with yet. You can't solve the problems. I mean, we built these problems up over 50 years, Dante, right? I mean, we can't solve them in a weekend. We can't solve them in a week, a month, a year, maybe even one presidential term. I mean, I hope we can get things well established in the right direction by the end of this term. But I guess the point is, this market reminds me a little bit of '87, where you had a very bad fall into the weekend. And I think there's a decent chance on Monday and Tuesday, if the Fed doesn't come out and say something dovish, that we're going to crash, early next week. We may not. It's hard to say. I mean, maybe the selling is done. But the point is that Trump clearly did something extremely disruptive with these tariffs. The market reacted in a way that said, you know what, the world is going to look different, and these stocks are overvalued. We need to take them down substantially. And that process may not be done. And I want to just caution all Bitcoiners to understand that just because we had one day of non-correlation, that does not mean that, in a full-out market collapse. Let's just hypothetically say that the market goes down another 10, 15, 20% next week. Not saying it will, but it could. And I think in that case, that would make it look very much like March of 2020 or September of 2008, where you get to a correlation of 1. And what that means is that everything will go down. People will sell. There'll be somebody who's leveraged that owns Bitcoin, and Bitcoin will be the easiest thing to sell, so they'll sell it. And by the way, Bitcoin and gold will emerge as the life rafts because they're the thing that can't be debased. And if what I'm talking about occurs, as my book laid out so clearly, and as everyone listening to this knows, the Fed will have to respond with massive monetary stimulus. They'll have to go quicker, harder, bigger than they did last time, and so that will be the big print. I mean, we've had two big prints, '08 and 2020, but this one will be even bigger. And when that, there's nothing that fuels the growth in the underlying base money that's sound, which is Bitcoin, and the older base money, which is close to being as sound, which is gold, as monetary debasement. And we're talking massive monetary debasement. If, and it's only an if, and I'd say it's maybe 50-50, the market goes down the way I'm describing.
Yeah. I mean, take us back a little bit to December or October of '87. What do they call that? Black Monday?
Black Monday or Tuesday. Yeah, I mean, I was in the markets then. I was fairly young. I entered the world in '83, so I was only 4 years into my career. But I was managing a fund or money, and And I had my own personal money, and you could tell the markets were very overbought and very, very vulnerable, and they started doing some things with the dollar. The Treasury Secretary made some comments about the dollar, and that's what triggered that whole meltdown. And at the same time, that something had evolved at that time, something called portfolio insurance. I don't know if people have heard of this, but what it was really just a giant stop loss on the market. And so the whole notion that they were selling equity investors is we will sell you insurance below the market, and we will automatically stop your loss if the market goes down. So you participate in the upside, and if there's downside, you'll get capped out where you won't lose very much. And the assumption behind that whole model was there would never be a discontinuous market. So that, in other words, everyone would get to sell 4% down, right? But what happened is the market jumped over the 4%.
Yeah.
And then all the sell orders got triggered, and 4% became 22%, right? And so, we don't have that exact same setup today, but there are a lot of derivatives today. And, I'm guessing there's some people who are reading the newspapers this weekend, the average investor, they're looking at their retirement account, they're calling their financial advisor, they're saying, hey, we kind of took a hit last week, what should I do? And, if a quorum of them comes in on Monday and says sell, it could look similar.
The tension is frighteningly similar of 1987, and markets are on the verge of collapse. It's possible that a significant stock market meltdown is imminent, and Bitcoin will not be immune. Everything could collapse due to forced liquidations and panic selling. Only after the harm has been done will the Fed respond, launching yet another round of aggressive money printing. Crypto will not be immune to the initial shock, not even with Treasury assistance. However, as the stimulus begins to flow, Bitcoin is expected to grow as a haven from a dysfunctional system rather than as a hazardous asset. Volatility is now assured, not just probable. The banking industry is collapsing. The upside could be dramatic for those who hang on, but the rebound will be negative. Finally, markets are realizing that the days of free money are coming to an end. The imposition of Trump's tariffs has shocked those who believed it was merely political theater. The recession the Fed aimed to prevent is approaching more quickly than anticipated as wealth vanishes and spending slows. There will be a short-term decline in Bitcoin. To remain up to date on the most recent developments in Bitcoin, cryptocurrencies, and the digital economy, please take a moment to like this video, subscribe to the channel, and enable post notifications.
It was sort of like the algorithms were programmed to have a reaction from Donald Trump and or Bessent that was going to be kind of, you're not going to do what you say you're going to do. Because it's crazy about this whole thing is they forecasted this tariff day on April 2nd back in February. Everybody knew the date it was coming, and it's crazy. When it happened and they did what they said they were going to do, the market sells off. And I think it's like, was the algorithm tuned to say, yeah, politicians say this, but then they do the opposite? It was so fascinating to see.
I found that exact same thing fascinating. I think two things. I think one, it was a bullish mindset. Just we've had so much, the markets only go up, and everyone knows that doing what they're talking about would be very bad for the market, so they won't do it. They can't do it. He's just bluffing. This is just the art of the deal with Trump. And I always kind of took the other side of that. I thought to myself, no, if he wants to, the system is broken, and the system needs to be fixed. And if you want to fix it, you might have to break some glass to do it. And my sense was, he's a gutsy guy, and he's not afraid to break glass. Look at how he's behaved politically. He's taken many stances that I know most people didn't think he could beat Hillary, and he did. And so kudos to him for sticking by his guns. And even today, and this is probably why if the market doesn't crash next week, I think there'll be a lot of talk that, well, he's still going to back off, that these tariffs aren't real. And there's some interesting things in there. I don't want to go into it in great detail, but the whole way they calculated the tariffs and they messaged it.
With the boards and
with the boards and the tariffs are equal to the trade deficit that they've been running, and that's what they've been charging us. So we're going to charge half of that to them. There's some real political salesmanship, I should say, involved in that. And so be it. That's the way the game is played, right?
What do you see the rest of the year looking like in terms of Bitcoin, in terms of the market in general?
Yeah. So I've always said, don't trust me for market predictions because nobody ever gets them right. I can't get them right. Anyone who tells you they can is lying. But a general trend I feel comfortable with. I think that the stock market has seen its peak. I feel extremely comfortable with that. I think that based on all of the free money that boosted the stock market and created the everything bubble, that there's a very high probability that at the end of this calendar year, the stock market is substantially lower than it is now. The stock market has been the economy. The top 10% account for 50% of the spending. The top 10% own 84% of the stocks. When you take 20 or 30% off the top 10%'s retirement portfolio, guess what? They stop spending money. Yeah. They don't take trips, they don't use hotels, they don't use airplanes, they don't buy cars. They just cut back because they don't have as much money to spend. And so that leads to a recession, which then becomes reflexive because we buy less cars, then the factory worker who makes cars gets laid off. And so I think we're headed into a downturn. It's long overdue. It's going to be painful. I'm not happy about that, but it is what it is. I mean, the third mandate has always been healthy and continuously operating financial markets. And we know that when that is threatened, like in the March 2020 example, the 10-year went no bid. And they can't have that. In 2008, the banking system almost melted down and the ATMs weren't going to work. They couldn't have that. And so if we get to that point, I'm not sure we will get how close we'll get to that, but we could. If we get to that point, we know one thing's for certain. They will do what Neil Kashkari says. There's an infinite amount of cash in the Federal Reserve, because they'll just run the printer. They've got DOGE and the deregulation policies are trying to make everything more efficient, but that takes time. And in turn, on the other side of the monetary side, they're trying to get conditions looser. And some have arguably said they wanted to croak the stock market to help the bond market, and maybe that's true. I mean, I think there's a grain of truth in that. And Besant himself pointed out that the stocks are owned. I mean, a lot of the people who voted for Trump don't own stock. The bottom half of the country, they don't own stocks. Yeah. So they're not looking at their 401ks. They don't have them. Yeah. They're like, and to them, it's like, well, some rich guys lost some money. Too bad. I hope you don't bail them out again like you did in '08.
Lepard highlights that Trump moved to promote substantive change rather than engage in political posturing. He recognizes that Trump took a political risk by standing by his principles when many others thought he would compromise. Lepard claims that the tariffs themselves are meticulously studied, including how they relate to trade imbalances, which gives the choice an additional political dimension. He notes that this is the way politics is played, and that these actions can cause big changes in the market. Lepard also discusses how important financial markets are to stability. The Federal Reserve will intervene with forceful measures to restore liquidity if these markets collapse, as they did in the 2008 financial crisis or the March 2020 slump. He emphasizes that the Fed will use its infinite amount of cash to avert a catastrophe. This makes it possible that more money will be printed, which could raise inflation and cause further issues in the future. Lepard emphasizes that the system is designed to manage crises by injecting cash, but doing so could have dire economic repercussions despite the impending difficulties. Lepard thinks that a tipping moment is coming for Bitcoin and other alternative assets. Bitcoin may experience a sharp increase when people lose faith in fiat currencies after the inevitable crash occurs and the Fed is compelled to print more money. It will be a response to a crumbling system where the necessity for a decentralized, inflation-proof asset like Bitcoin becomes evident rather than a speculative outburst propelled by optimism. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.